Welcome to our weekly webcast. I'm in London, Ontario right now at one of the houses that I own down here that I rent out. It's an investment property, 5 bedrooms, 5 bath. I rent it out to students at the University of Western Ontario. Now, coming up in a month or so, this fall actually, I'm going to be releasing a complete real estate course for my MBA degree students. It's going to be exclusive to my MBA degree students. Anybody that signs up for my MBA or will or has signed up will get this elective for free. I'm going to teach you how to invest in your primary house or an apartment or commercial real estate or residential real estate you can rent out, kind of like I do with the houses that I own. So if this is the first time you're joining us in this webcast, welcome. If you've been with us, welcome back. So the way this call works is this is an AMA, like on Reddit. I mean, you can ask me anything. You can ask me business questions, career questions, any questions you want. And my humble goal is to help you take your career, portfolio, etc. to the next level. Without further ado, let's begin, and thank you. Please keep typing your questions. Let me talk very quickly about why I think that real estate is the best investment you can ever make and why it's a better investment than stocks in the long run. So when you invest in real estate, I want you to think of the word ideal, I-D-E-A-L. So with real estate, the I is for income. And so if you buy a rental property, which many people do, you can rent it out. So obviously you get income. D in ideal is for depreciation. And this is huge because this means that you can pay a lot less in taxes because you can write off the property that you buy and you rent out. And the way it works is this. If you own a residential real estate property and you're renting it out, you can depreciate it over 29 and a half years. And you can depreciate everything about the property except for the land. Now, when it comes to commercial real estate, you can do it over 39 years. And in 2016, and I'm not going to get political here, and I'll never let anybody know my political affiliation, but in 2016, Hillary Clinton and Donald Trump, in their first debate, Donald Trump mentioned the reason why he doesn't really pay taxes or much taxes is because he uses depreciation with his real estate empire. Okay, let's talk about the E in ideal. E means equity, meaning you get ownership in a piece of property that you can actually use for your personal balance sheet in order to be able to borrow more money or invest in other companies, etc. A is for appreciation, meaning the value of the property will go up materially, hopefully in the very, very long run. And my grandfather, God bless him, I miss you, who's hanging out with my sister Katie now. How are you? He once said, Chrissy, buy land, they're not making it anymore. And lastly, we have L. L in ideal is leverage. And a lot of people don't realize how powerful leverage can be when you invest in real estate. And I'll give you a very simplistic example. Let's say you buy a piece of property that you're going to rent out for $100. And you put down $20 and you're financing the other 80% or $80. If it doubles in price, that's a 5x return on your investment. If you sell it for $200 and you put down $20, that's a 5x return. So the bottom line is this. Before you invest in stocks, if you can, please try to buy your first residential property for yourself. And then I want you to look at investing in residential real estate. And my goal is for my students to, within 10 or 20 years, be able to make more money from their rental real estate properties than they do from their base salary. Okay. All right, let me go to the first question. First question is, hi, Chris, hope all is well. I'm setting up my social channels. I'm speaking 2 languages, English and my local one. What strategy should I take to set up social channels for 2 languages? It all depends what you're trying to do. Now, before I set up any company and before I go to any meeting, I always think to myself, what does the customer want? Or what does this person want? What drives them? So for example, before I meet with somebody in an informational meeting, or in a meeting when I'm trying to get hired, when I used to want to work for people, or when I'm trying to sell something, I usually tell myself people are motivated by 3 things. Number 1, they want to make more money. Number 2, they want to get promoted. And number 3, they want to enjoy what they do. It's the same thing when you set up social media channels. So let me give you a very quick real life example of a good friend of mine who has 2 languages on her channel. And so her name is Sasha Stevenson. And she has over 1 million subscribers on YouTube. And so she's based in Indonesia, and her channel is in English and in Indonesian as well. And she teaches English for people in Indonesia as well. And so what you can do is just take a look at her channel. And she interviewed me as well in English and Indonesian. Let me turn this down here. But you can watch here how she interacts and basically talks to two different audiences, English and Indonesian. Okay. All right. But the bottom line I would say is this. Whatever market you think is going to make you the most money longer term if you're doing this for a business, use that language. Yeah. Okay. All right. Next question I've got is from Vanilla Goodness, who wrote, I'm rereading Adam Smith this morning and decided to join the meeting. Excellent. Well, thank you for joining us. Appreciate it. Now, I just gave a big presentation to a large semiconductor company yesterday here in the Bay Area. And I was explaining to them how to make complex topics really easy to understand. And the best thing you can do is to use Chat GPT for this. So let's do a real life case study on this with Adam Smith. I'll make this quick. This will be fun. It's fun doing these things live, eh? All right, so let's go to Chat GPT. And Adam Smith's an economist who wrote The Wealth of Nations. So watch this. Give me 5 bullet points that explain Adam Smith to an 8th grader, which is my maturity, and use basketball reference. All right, and while this is coming up, let's see what we have to say here. All right, here are 5 bullet points explaining Adam Smith to an 8th grader using a basketball reference. He is the father of economics. Think of him as the coach who wrote the playbook for modern economics. Here, the invisible hand, and this is actually really interesting to talk about. Adam Smith introduced the idea of the invisible hand like a basketball game where players naturally move to where they're most needed without a coach constantly directing them. Basically, capitalism wins. That's what Adam Smith is all about. Divisional labor, he talks about here, free markets, etc. And here's the book he wrote, The Wealth of Nations, which really is the game plan for capitalism. So the bottom line is, and whenever I'm rambling and I'm giving a speech, I say the bottom line. That's a good crutch to use. But the bottom line is, whenever you want to explain something somewhat complicated to an audience, whether it's for an informational meeting or a sales meeting or a presentation, you can use analogies by leveraging ChatGPT like I just showed you. Okay. All right. Next up, I have got Lay, who wrote, good morning. Good morning. Good to see you. I'm enjoying my first year of my 8th decade. Congratulations. That is huge. I love it. I love it. Nicely done. Nicely done. Yeah. The interesting thing is now people are living much longer than they used to. So back in the 1950s, the average life expectancy was 26 years less than it is today. So you're actually 54. So welcome to your 5th decade. Yeah. And I believe there's a lot of people on this call that are going to live to 150 years old. A lot of people are in their 80s, 90s, 100s, whatever, and they're still really, really with it. And Warren Buffett's basically 100, and he's still working. Yeah. So I don't want anybody to think that the purpose of our life is to work hard so that in our 50s, 60s, 70s, 80s, we retire. It's a pointless life. Yeah. And you can always reinvent yourself. And so if there's anybody on this call that is not passionate about what they're doing in life, let me help you change careers. It's a lot easier to do than you think. And you don't want to send in your resume whenever you see a job opening online, because you have literally a 1 in 250 chance of getting that job. And the person that gets that job ultimately knows somebody at the company. So how do you get that job? How do you change careers? Well, you set up tons of networking meetings. And in my MBA degree program, I teach you how to network on steroids using LinkedIn. Now, my success rate, humbly, on getting meetings with people I've never met before by leveraging LinkedIn and networking skills is 95%. And I don't say that to impress you. Rather, I say it to impress upon you the fact that you can do this as well. And for more details on this, I have a free book you can download if you want. I think it's like 300 pages or so. Just go to my website, harounmba.com. Scroll down to the bottom here. And then you can download this book called Networking to Get Customers, a Job, or Anything You Want. Now, if you're at a certain point in life and you're thinking to yourself, you know what, man, I don't want to get out of bed this morning because I'm not passionate about what I do. Well, I want you to think about this then. Let's say I give you 30 days off. And in those 30 days, you're not allowed to travel, you can't go to school, and you can't work. What are you going to do with your time? Whatever that is your next career, and that's your passion, your purpose, your raison d'être, and that is what you need to pursue. And so my humble job is to help you find your passion and expose you to all jobs so you can change careers if you want to. So that, as Confucius said, you don't have a job, you have something you enjoy. And yes, I butchered that quote, I know. But I want you to think of me as your humble waiter. And this is where I proposed to my wife, Christine, in Paris. She said yes. But my job is just like when you go to a restaurant, you look at the entire menu, and you only choose one or two things, but you look at the whole menu. And so my job, my purpose, my raison d'être, is to expose you to tons of different types of careers. And then you decide what you're most passionate about. And so for me, I've tried lots of careers. I worked in consulting. I worked, at Goldman, worked at hedge funds, venture capital. And I finally found my passion, which was teaching. And I want you to do what you love doing. That's why I'm here. And when one teaches, two learn. Okay, we're going to move on now. But welcome to your 8th decade, Leah. I'm really, really happy for you. Yeah. Now, here are some tips on how to look younger. Okay. So, a couple things. Number one, and I'm 52, but I have the maturity of probably a 10-year-old. Yeah. And when Grand Theft Auto 6 comes out next year, you guys aren't going to see me for at least a month. I'm just going to be playing day and night. But here are some tips. All right. Number one, always wear SPF. And a lot of women look younger than men, partially because they put on makeup, which has SPF embedded. So always put on SPF, please. Number two, if you don't want to lose your hair, and by the way, it's really cool to lose your hair, because Michael Jordan is the coolest guy ever. And he had this great quote. He said, "I failed over and over again in my life, and that's why I succeed." But if you want to keep your hair and you're a guy, what you can do, and talk to your doctor first. This is what I do. Since my 30s, I've been taking something called finasteride. And that will stop hair loss. And I've been dyeing my hair for 8 million years as well, because I went gray in my 20s. Yeah. Other tips I can teach you about longevity include diet. So make sure that you drink lots and lots of water. And I carry this thing around with me all day, and I try to finish as much as I can. You can get this on Amazon. It's dirt cheap. I put a lot of vodka in this as well, so that I don't get nervous when I'm presenting to you guys. No, I'm just kidding. I don't drink anymore, but I don't drink any less. So this is important. Another thing is diet. You are what you eat. And for those that eat organic, you are what you eats. So I have a lot of antioxidants in this. And every single Sunday, I make 7 of these things. And I put kale in it, right? It's all juiced. Kale, whey protein, omega fish oil, blueberries, and every antioxidant I can find. And so this is my first meal of the day, and I drink it slowly. And you never want to overeat either. Only eat when you're hungry. And I know a lot of people that have lost weight without using prescription drugs. They've done so by doing this. After their first course at dinner, they drink an entire glass of water, and that will curb their appetite. Last thing I'll say on trying to reverse aging, which is tough to do, or slow it down at least, is to exercise vigorously. And so what I do is I get 20 to 30,000 steps every single day on this treadmill that costs literally, I think it's like 150 bucks, because there's no rails on the side. So I walk all day long. I have one of these stand-up desks as well. And this really helps. And it makes me feel like I just woke up, meaning I'm fresh all day long. And I learned this hack because when I was younger and I was in school, the first hour of studying in the morning when I got up early was better than 10 hours at night when I was cramming. And so if you're walking all day or exercising like this, then you trick your brain into thinking that you just woke up. And so every hour is 10 times more productive. I know it sounds crazy, but I promise you this works. In fact, Steve Jobs used to go on a walk every day at 1 p.m. by himself, or sometimes with his best friend, Larry Ellison, the founder of Oracle. And that's how we come up with these great ideas. Let me show you how to get this product. And I'm not sponsored by anybody. I never have been. But I want to show you where to get this. It works. And I got one for my son as well. He's now in his third year at Berkeley. So treadmill right here. And I keep cutting the price. Here it is here. Here's the exact one I have right here. Yeah. All right. So it's 129 bucks. And what you can do is you can put this under your couch if you want to. Get a stand-up desk like I have as well. My stand-up desk is like 8 feet wide. I thought if I had a bigger desk, it'd be neater. But you can't see it. There's garbage all over. There's props everywhere. But anyway, I recommend getting this. Instead of buying my courses, this is the best investment you can ever make. Try it out. I promise you, you will be way more productive. And you'll live longer. You'll be happier too. All right, so congratulations, Lay. All right, next up, I've got Peter. Hey, Peter, who wrote, hey, Chris, did you hear the news about the Wells Fargo employee, Denise Prudhomme, age 60, who passed away at her desk and wasn't found for 4 days? Wow, no. Is it the job that can be lonely or just Wells Fargo? Wow. Well, God bless her. Yeah, I don't think it's Wells Fargo. I mean, I have a lot of friends that work there. I think it's a great company. I don't know. I don't know why she passed away. But what I will say is this. So I once worked at a company. I'm not going to disclose which one. And there was this younger woman in her 20s, and she put a lot of pressure on herself. And then one day we came to work and she was no longer at work. And I take this very seriously by telling you all that when it comes to mental health, we tend to take days off for work when we're physically ill. This is physical as well. And when I used to work at large firms, I would take 1 or 2 days off a year when I wasn't physically sick, but I was mentally drained. And I recommend that you all do that, please. And another way to look at it is this. If you're really burned out, okay, and you're stressed and everything, and you wake up one morning, you're like, I'm just not feeling it. Don't go to work, because you'll commit a CLM, meaning career limiting move, right? You might be a bit grumpy, whatever. Take a day off. And I used to do that when I lived in New York. I remember once when I worked at Goldman, what I did was, and the woman that passed away did not work at Goldman. But when I worked at Goldman, I remember one day I was really, really stressed out. It was right after 9/11, and I was like, what's the point? And so what I did was I skipped work that day. And, I went for a walk and had lunch by myself in Central Park and Tavern on the Green. Went to go see a movie by myself called The Rookie, great movie. And I would do this twice a year. And so from a mental health perspective, everybody please do this. Yeah. And also, I think it's important to take 1 day off a week. And I'm not going to get all religious on every, actually I am, I don't care. So there's 10 rules that we live our lives by. And it's the basis of all great religions. Okay. And one of those rules is to take off 1 day per week, honor the Sabbath. For me, it's Sunday. I go to church, spend time with my family. For my other friends, it's Sunday or Saturday or Friday. And, God created the world in 7 days. It was actually 6 days, but he rested on the seventh. Obviously, he didn't have to rest. But our forefathers and foremothers, thousands of years ago, knew that you have to take off 1 day a week. And I don't care how much work y'all have. You have to take off 1 day a week. Because if you do, then on Monday, or the first day of the work week for you, you're going to be twice as productive. And it's an investment in yourself. And from a mental health perspective, we all have to take off 1 day per week. Okay, let me move on. But God bless whoever that was that passed away. Thank you. Yeah. Okay. All right. Next up, Aviation Mentor wrote, great to see you as always, Chris, likely. You wrote, on the silver price increase, the back-to-school discount just discounted back to the precious price the day before. Yeah. So we had a sale, which was, so I'll show you just really quickly here. The sale is over. So we had a sale where this product here, it was 25% off the $9.99, and the sale ended yesterday. If you want, send them an email to support@harounventures.com. Anybody can do this just for today, and I'll give you 25% off of this. So again, that's support@harounventures.com. Thanks. All right. And if you had any issues, like what you had to do is you had to enter in fall 25 at checkout. But again, just send me an email. I'll take care of you. Yeah. Okay. Next up, Jenny. Hey, Jenny. First time I've seen you on the call. Hope you join us again. So Jenny wrote here, hey, Chris, which of your courses would you recommend to launch a venture from beginning to end? That rhymed. I'm ready to start writing a business plan. I have that course of mine, but what's next? VC, zoning, please help. Absolutely, yeah. So I would recommend just go to harounmba.com and you can sign up for my Silver MBA program. And the reason I mention that is because there's a venture capital boot camp as part of that MBA degree program. And what I do is I teach you how to start a company, how to get customers, how to network, to raise capital, etc. So that would be the next step if you're interested. Yeah. Okay. And with all my programs and courses, there's a 30-day money-back guarantee and all that stuff. Okay. All right. Next up, we have Yiping, who wrote, hey, Chris, hey, thank you for bringing up real estate investing. You're most welcome. How would you compare real estate investing versus stock investing using leverage? In particular, trend following strategy in the long term. Yeah. So I would say real estate investing is better than stock investing when it comes to leverage, only because you can get the write-off when it comes to depreciation. You can't depreciate the stocks that you own on leverage, right? And that's why a lot of people make a killing investing in real estate. And I'd love to have it so that my students longer term can have 3, 4, or 5 rental properties that they rent out, which is greater than your base salary. So, and that real estate elective that I mentioned earlier today is going to be released in late October, and it's going to be exclusive to just my MBA students. Won't be available anywhere else. Yeah. Okay. Next up, Abigail wrote, hi, Chris. Hi, everyone. Good to see you. All right, moving on to Victor Franco, pardon me, who wrote, hey, Chris, it's been a long time. I hope everything is going well. Welcome back. And I'm glad the channel is going strong. It's been fun. Thanks. You wrote, I'm putting money into my 401k, but honestly, the market might go down anytime. How can I invest $3,000? Yeah. So I would think longer term. Okay. I would always tell yourself this when you're investing. I don't know the path, but I know the destination. And I promise you, if all you did was you put your entire 401k, 23,000 or so, into the VOO, ticker VOO, that's the S&P 500. If you did that every single year, in 20 years, you would have between $1.5 and $2 million. Okay, now the S&P is not going to be up every year. And I know for those of you that have followed me for a long time, I used to say, hey, wait a second, I thought you said $1 million. Well, I think it's closer to $2 million, and I'll tell you why. I think with AI, that this is really helping companies to be able to cut expenses materially, which goes right to the bottom line. And so in my humble opinion, I think the S&P 500 over the next 2 decades is going to be up between 15 and 20% on average every year. Now, it's not going to be up every year, that much I promise you. There will be big down years. But I want you to be long-term focused. And as Warren Buffett said, the longer the view, the wiser the intention. In fact, Buffett mentioned this recently. This is fascinating. So Buffett mentioned that if you invested in Coca-Cola day one on the IPO, 1 year later, you'd be down 50%. But obviously, if you held it for the long term, you make a fortune. And every single one of us in this call have made the cardinal sin of buying a stock and then selling it because it went down a bit. Warren Buffett said the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. Think about that. So think of all the stocks you've sold over the years because it dipped a bit. It's a little bit ridiculous, and I'm being self-critical as well. So there's a lot of stocks where the chart looks like this. Most stocks actually in the S&P 500 over time. And so I want you to buy and hold. And I want you to sit on these stocks forever. And I want you to tell yourself, like Warren Buffett does, after you buy a stock, the market's going to be closed for 10 years, so I can't sell. Now, obviously, Buffett knows the market won't be closed for 10 years. But that's how long-term focused I want you to be. Always, please. Always, always, always. And the reason why their best investment for most people is their house is because you can't really sell your house when you're panicking, right? Because it's highly illiquid. And that's a good thing because it makes you a long-term investor. Last thing I'll say in this is most governments around the world will reward you for being long-term focused. How? Well, if you own a stock for less than a year and you sell it, you usually pay much higher capital gains taxes than if you held it for at least 1 year or longer. The bottom line is be long-term focused, please. Thanks. Okay. Again, when you're rambling and you're presenting or you're doing Q&A, whatever it is, a great crutch to use is the bottom line is yada, yada, yada. Yeah. Or if you're not sure what to say next in a speech, you could say in terms of, which will buy you time. And look at your slides as well. In terms of, look at the next bullet point. And other crutch or filler words are moving on to, or in terms of, or the bottom line is. Let me go to the next question. Okay. All right, Raphael, how are you? Rafi wrote here, hope you're doing well, likewise. How would you deal with people who have no business experience, degree whatsoever, but talk like they're suddenly the experts? Thank you. Yeah, you're most welcome. Yeah, sounds like you're talking about me. Yeah, so I'm just kidding. Okay, it's hard. So there's a couple ways to disagree with somebody without creating tension. You can use the methodology of feel, felt, found out, where you say something like this. I used to feel that way, but I felt differently when I found out that. Or what you can do is this, and this works in relationships too. Oh my God, I can't believe I'm going there, but I am. If somebody says something, and regardless of how you respond, positive or negative, whatever, it's going to come back to bite you. You say 2 words. You say, I understand. That's it. And for corporate politics, this works as well. I understand. You're not saying you agree or disagree. You just say you understand. Yeah. Okay. And that may or may not work in relationships too. Yeah. Don't take relationship advice from me, please. Okay. All right. Next up, holy moly. I wrote, hey, Chris, just checking in. Thanks again for all the insights. Great to see you. Thank you. Okay. I love that name that you put there, holy moly. Only because my son Andrew, when he was 4, I'll never forget this. It was Christmas, and my father and mother-in-law gave him a present, and he was 4 years old. And he opened it up, and it was a bunch of socks. And in front of everybody, he went, "Holy brutal!" It's kind of funny. No filter. I wonder where he gets that from. Okay, moving on to Abigail, who wrote, we invested in property in our country of residence 15 years ago. The property market is currently depressed. We cannot get rentals to break even. What's your advice? Would your advice be to sell at a loss or to hang on? Yeah. So step 1, I would talk to an accountant, okay? And ask the accountant, if you were to sell it, would that mean that you would pay less taxes in other areas of your investment portfolio, for example? Also, I don't know anything about your market. If you want, you can give me a little bit more details on where the property is, and I can humbly give you my humble thoughts on that as well. But generally speaking, as my grandfather said, buy land, they're not making it anymore. It's a great long-term investment, usually. Yeah. Okay. And what you want to do in order to understand the value of a piece of property is it's only worth what other properties around it are worth. So for example, you can go to Zillow. If you get Zillow in your country, if you can't type this. What is the equivalent of Zillow in my country? But if you go to Zillow, you can always look at property values around you. Yeah. Okay, and then Carolyn wrote, good morning, Chris. Good morning, Carolyn. Carolyn's from France, lives in Canada now. What is SPF? Yeah, earlier I was talking about how to slow down aging, and SPF is basically, I can't remember what it stands for. I'm sure somebody will write in the chat there. But it's sunblock, basically. Yeah. and I use SPF of 30. Yeah. And my SPF actually that I use every day, it's a little bit of a bronze color. It's called Atlassian, and it kind of makes me look a little bit more tanned. Yeah. It goes along with this. And maybe I'm beautiful, maybe it's Maybelline. I don't know. Please tell me somebody understood that. And the reason why I have this is when I used to do television interviews, there's always a makeup person because there's bright lights. And if you're doing a lot of webcasts, okay, or Zoom calls, and you have bright lights, you have to do this. And I'll explain why. If you don't, you'll look like you're perspiring and you're nervous. In fact, in the first televised debate between Kennedy and Nixon in the early 1960s, Kennedy let the producers put makeup on him, and Nixon did not. And Nixon looked nervous. And that's one of the reasons he lost. Anyway, put this down here. Okay. Oh, another thing you can do, if you're about to give a speech and you look tired and your bloodshot eyes like me, I got hardly any sleep last night, you can always use eye drops to get rid of, like, my eyes look wetter. Yeah. Anyway. All right. Okay. Give me 1 second here. Ooh, lots of questions. All right. And then Blake wrote, I know all about hair, no hair. Hey, Blake, good to see you. And I always smile when I see your name because I think of that video where there's that teacher who calls the student Balake instead of Blake. Blake, yeah. Or Jaqueline, which is my mom's name. Okay. And then Aviation wrote to also put in pineapple, blueberries, oil. Yeah, I don't do the pineapple. I do blueberries. It's antioxidant. I do strawberries as well. It's the only other fruit I use. And I use omega fish oil as well. Okay. Andre, how are you? Good to see you. Andre is one of my students from Florida. Best state. I love Florida. And then Lay wrote, yeah, I read about that Wells Fargo employee as well. Things happened, but she apparently wasn't found for days. A big problem. Yeah, so she was at her desk for days. Wow. Terrible. And then Kirk wrote, I just discovered your channel from the Billions Reviews. Nice content. Keep it up. Thank you. Appreciate that. Thanks. And what I'm doing is every single episode of Billions, I do a vlog for it. You can always go to my YouTube channel. I've done one for the movie Wall Street, The Wolf of Wall Street as well. And I'm working very hard right now on The Big Short, which is going to take me a while to get through because I want to do it right. Thanks. Okay. Next up, Yipping wrote, give me 1 second. Let me just block somebody. Remove. Okay. So Yipping wrote, hi, Chris. What's your view on passive versus active investing? Is it futile to search for a star fund or a manager in the long run? Yeah, I think it is. I don't ever want you to invest in mutual funds because mutual funds are a scam. Why are they a scam? Because the fees are insanely high, and including hidden fees, you'll be paying 5% per year in fees, and you pay more in taxes with mutual funds. Why? Because mutual fund managers, what they do is they chase performance because their bonus is based on how well they do. And so they buy and sell, especially in Q4. And what happens is you pay more in taxes, usually, capital gains wise, if you own something for less than a year. Plus, ETFs tend to beat most mutual funds anyway. Yeah, so I think mutual funds are in secular decline. And so for my go-to ETF is the VOO, ticker VOO. And to learn more about which ETFs to maybe invest in, you can go to a great website, which is free to use. And it's called ETFDB, that's etfdatabase.com. And what you can do is you can look at 5,000 ETFs by different sectors, countries, etc. Yeah. And again, my favorite one is the VOO, ticker VOO. And whenever you look at ETFs, what I want you to do is I want you to look also at the expense ratio. Okay. So what that means is this. The expense ratio here is 0.03. And this here, ticker VOO, is the S&P 500. And what an expense ratio of 0.03 means is this. For every $100 you invest, you're going to pay 3 pennies every year in fees, which is nothing, right? With mutual funds, this number here, including hidden fees, can be 4 or 5%. Huge, yeah. And also, you want to make sure they're liquid. What do I mean by that? Well, you want to make sure that if you need to, you can sell it quickly. So what's my benchmark? Well, my benchmark is never buy more than 10% of the average daily volume in an ETF. Now, this one's plenty liquid. It trades like water. And I say that because illiquid stocks own you in a down market rather than vice versa. Thanks. Okay. Yeah. And in terms of passive versus active investing, so passive investing I refer to as, every time you get your paycheck, every 2 weeks, you have money taken out. So it's out of mind. You can't see it. You can't spend it. And you put it directly into your favorite ETFs, passive. Okay. And as Warren Buffett said, you want to spend what is left after saving instead of saving what is left after spending. So that's passive investing. Active investing is when you do bottoms-up research on a company. And if you don't have time to do a thorough research report analysis on a company, then don't invest, please. So that would be active. Yeah. So let me show you an example of how to do research on a stock. This will take me a second. I'm opening up Excel hell. Hopefully it's opening. Let's see here. Here it is. Okay, good. All right, and let me go to my investment dashboard. Okay, here it is here. And what I'm about to show you is how to do research on companies. Okay, and so step one, whenever you're doing investment research on a company, I want you to take a step back and see the forest from the trees. And I want you to think to yourself, in 5 years, will this company be more relevant or less relevant than it is today? Then I want you to do research on the company by looking at qualitative research, quantitative research, and financial research. And what this means is I have 100 steps, and this is for my MBA students, but I have 100 steps on how to do research on a company. And in these 100 steps, there's 780 questions you have to answer. And after you answer all these questions, and I also teach you how to create your income statement, cash flow statement, et cetera, and come up with target prices. But after you enter in all this information here, you get 3 outputs, okay? And this is for active investors. Number one, and this is just dummy data, you get a 1-page report here, which analyzes fundamentals valuation and technical analysis, and you can turn off technicals if you want to as well. And you can hit print and put this in the back of your resume if you're interviewing with a mutual fund or a hedge fund. What also comes out of this is a 100 to 150 page report you can print out. This is based on my experience, working for Goldman, hedge funds, venture capital, et cetera. And lastly, number 3 or 3th, as my son Andrew used to say, right here, you've got a dashboard based on all that stuff you entered in. So that's more active based investment management. Okay. Okay. And then Aviation wrote 30-day rule before and after stock lose. Yeah. I'm not sure what you're referring to there, but when I worked at Goldman Sachs, whenever we bought a stock, we had to sit on it for at least 30 days. And that was a good thing, so we didn't panic. Yeah. And there are certain stocks that were put on the restricted list if the firm was doing banking stuff for the company, for the client. Okay, next up, Jatan wrote, ADP data came out with only 99,000 jobs added in the private sector, below the estimate of 145,000. Should investors rush towards bonds? Yeah, one data point doesn't make a trend. I would never freak out just from one weekly jobless claims number or ADP report. And things are a little bit different now because when you look at unemployment and unemployment statistics in general, we have to keep in mind that every single week, 100,000 baby boomers retire, right? And that really obfuscates or messes up the data as we look at it. Yeah. I'm so long-term focused, I don't really care, to be honest. And a couple of Mondays ago when the market was down materially, I bought a lot of stocks. I put in limit orders. And, do your own research first, of course. But if the VIX, and I can go there if you want me to, I've talked about it before. If the VIX closes above a reading of 70 or 80, and I'll put my reputation on the line here, you go all in. Do your research first, obviously. Yeah. And I can talk about more details on that if you want me to. But be long-term focused, because day trading does not work. How do I know that? Because we can't name a single successful day trader. They don't exist. They don't exist for a reason. It's not because they're not intelligent. Not at all. It's because stocks go up and down in the near term for random reasons, like a payroll report. And every month has 20 weekdays, meaning 20 days the markets are open. And stocks go up and down for random reasons. You know, Intel stock might crash because NVIDIA's guidance wasn't good. Whatever. Or you could have geopolitical commentary between two economic superpowers that causes the market to go down. We just can't forecast that stuff. Just be long term. And if you want to put that into perspective, pick any stock that you've loved over the past couple decades and just look at the chart, man. Right? It's usually like this. And the reason it's usually like this, right? And this is the volatility intraday. Like, who cares? The reason it's like this, and focus on the path, the destination, not the path. The reason it's like this is because cash is trash. Because the government, what they do is they keep printing this stuff. It's ridiculous. They keep printing it, so they dilute your net worth. And so if they keep printing this stuff, the government is basically telling you, don't invest in our currency, buy other asset classes instead. I'll roll this up later. Yeah. Okay. I have a prop for everything, folks. All right. All right, next up, Keith wrote, I own NVIDIA, Palantir, TSMC, Taiwan Semi, and Google. I'm a little bit worried about TSMC in light of China's desire to take Taiwan. What are your thoughts on this? Yeah, so if you're worried about that, what I would do is instead you can buy the SMH, okay? And that's an ETF that represents semiconductor stocks. Let me show you. And I used to short it when the market was going down years ago, and I managed money at a hedge fund. So if we type in here SMH, this is a semiconductor ETF. It's been around for ages. And if we go to holdings here, you can buy this instead. So right here, you'll see in this ETF, which is very liquid, 13% of this ETF here is Taiwan Semi, TSMC here. Yeah. And so that will decrease your exposure to Taiwan Semiconductor by, 87% if you just buy this ETF instead. Yeah. And that way you don't have to worry as much about geopolitical issues when it comes to Taiwan, for example, per your question. Yeah. Okay. All right. Okay. And then Manas, how are you? From India, who wrote, "Good morning, my dear mentor. Hope all is well with you. Hope you're doing well as well." And I see that you're on my calendar. I'm looking forward to chatting with you. I think it's tomorrow. Yeah. Okay. All right. Next up, we have Meet the Requirements, who wrote, "I took a bet on myself to complete a software engineering boot camp, and I'm interested in becoming a quant developer. Am I cooked? What should I prioritize?" Yeah. Yeah. If you're interested in quantitative analysis and artificial intelligence-based algorithms to invest, what I would do is I would do research on a company called Renaissance Technologies. And Renaissance was founded by a brilliant man, God bless him, he passed away recently, named Jim Simmons. And Jim used to work for the government of the United States at the NSA. He's a brilliant mathematician. He left in 1983 and started Renaissance. And Renaissance is an AI-based hedge fund that is so good that its average return since the 80s is literally 60%. How does he do it? We don't know for sure. But he's got thousands of Linux servers running in parallel, and nobody knows what's in those things. Obviously, it's heavily guarded. And one simplistic example could be this. There's lots of parameters that go in, data points, and then the algorithm picks stocks. So one example could be this. If it's raining a lot, that's the input, then short restaurant stocks, because people don't go out to eat when it's raining. But I would do a lot more research on Renaissance, if you can, specifically their medallion fund. Yeah. Okay. And in my MBA program, I also teach you how to use Python from scratch, even if you have no background at all in Python. I teach you Excel as well, and programming Excel from scratch, and that will help you a lot with your career in that area. I use tons of props to explain object-oriented stuff. And if you meet me in real life, I'm a tiny man. Yeah. I have the worst dad humor. Okay. Okay. Oh, aviation, you meant to, O was olive oil. Yeah. And I put olive oil every single night on my salad. Let me show you my diet. So all you have to do, or what I do at least, sorry, is I'll show you. Okay, so I order food from Whole Foods, sorry. Let me see here. I'm an open book, man. Here it is here. Yeah. All right. So here's my diet right here. Okay, and so this is what I get for my salad every night. I have this. I have olive oil in it. This one here, organic. Okay. I also put in avocados and lemon with everything, and eggs as well. And the other stuff you see here, this here is kale. I get tons of this. This goes into my shake. So does this, as well as raw ginger root. Yeah. Okay. All right. Next up, Chetan wrote, Happy Teacher's Day, sir. Thank you. In India, we celebrate the 5th of September as Teacher's Day. Thank you so much. Thank you. And I'm incredibly privileged to be able to teach. And I certainly appreciate you all coming to this weekly webcast. This is week 287. Oh my God, 287. That's cray cray. Yeah. But I'm going to do this till the day I die. Yeah. I love it. Okay. All right. Next up, Miku wrote, what are your suggestions about starting a hedge fund on upcoming, incoming developing country? Yeah. I'd say it's very tough because of liquidity, right? If it's a developing country, let me know the economy and I'll tell you, I can give you a lot more details on it. But make sure that liquidity is not an issue. Yeah. And if you want to know how to start a hedge fund, go to my YouTube channel and you'll see a video I did on billions where I teach you how to start a hedge fund. Yeah. Okay. Next up, Manas wrote, Jim Cramer said, the economy should, let me do the opposite. Hold on. Said, I'm just kidding. The economy should slow down. So the market do cuts generally slow market based on your experiences? No. It's like what came first, the chicken or the egg. What usually happens is when the economy slows down, then the government cuts interest rates. Usually that's the way. And, good fiscal and monetary policy is to be conservative. And when things are going well, from a monetary policy perspective, you raise interest rates. Why? So that when things suck, you can cut interest rates to jumpstart the economy. And I worked on the same floor as Jim Cramer at Goldman. This is after he left, but it was the same floor. And I asked people that knew Jim Cramer at Goldman, older people, partners when I was there. I said, what'd you think of him? And they said that he was insanely smart and probably one of the two smartest people ever worked at Goldman Sachs, the other one being Robert Rubin, who became the Treasury Secretary as well. Yeah, Jim is wicked smart. And to learn more about Jim Cramer, you can read a book of his called Confessions of a Street Addict. Yeah. Okay. But always do your own research. Yeah. And do a search for Jim Stewart interview, Jim Cramer. Yeah. I love the fact that I don't have any sponsors and I don't want them. So I can say whatever I want. Yeah. Okay. All right. Manas also wrote Happy Teacher's Day. Thank you for making me a teacher, he wrote. And yeah, thank you. Yeah. And Manas teaches also on Udemy. I think you do a lot of AI courses and a lot of other things too. Yeah. Okay. Next up, Mahmoud wrote, hey, Chris, will you play GTA next year? We know you're a big fan of the game. Oh my God. Yeah. Yeah. And I recently finished GTA 4. I couldn't do it years ago because my kids were younger and stuff. Yeah. But it's a masterpiece. Yeah. I like Red Dead Redemption better though. Okay. Next up, Manas wrote, my mentor, Ilya from OpenAI, raised $1 billion for a super intelligence safety startup. He is a real man who built OpenAI. He has the top guys. Yeah. And he's ethical and cool. Yeah. So Andreessen Horowitz and Sequoia also invested. And those are two amazing brand names from a venture capital perspective. I've partnered with both those companies in the past. They're amazing. Yeah. Okay. And competition is a good thing for the consumer. Yeah. And ethics. Okay, next up, Pranav wrote, "Hey, Chris, first time joining the webcast. Welcome. Hope you join us again. But I've been following your channel since I took your MBA course on Udemy. Thank you." You wrote, "You inspire me to want to be better and understand the financial world." Thank you. Thank you. And welcome. And I hope you join us again. Thanks. Okay. And the first week of October, first 2 weeks of October, there's not going to be this weekly webcast because I'm going to be in Kenya building our next school. Yeah. All right. Next up, Keith wrote, "For your silver MBA, do you accept PayPal? Can I do 4 or 5 payments? I have no problem just writing a check, but since I already have an MBA, it would save the 1,000 questions from my web." Sure. Yeah. Yeah. So the way it works is, I don't know if we take PayPal. Maybe we do. But all you have to do is go to learn.harounventures.com. You click here on the silver MBA. I'll make this quick, I promise you. And if I go down to the bottom of this screen here, you can one-time payment of that, or you can do 12 payments of this, or 6 payments of that, or 3 payments of this. And I have a 30-day money-back guarantee for all my products. Let me move on to more questions though. Thanks. All right, next up, Pranav wrote, "My question is, are you worried about the current national debt in the United States? You mentioned before that countries should not be run like companies. Could you elaborate on this?" Absolutely, yeah. Yeah, a lot of people get worried. It happens all the time about the amount of debt the United States has. I'm not worried. And I'm not reckless, but I'll tell you why I'm not worried. It's all relative. The value of any currency is relative. And the United States, which has a lot of issues, but a lot of good stuff too in it, the United States is the very last company on the planet that would ever go bankrupt. It's all relative. And the United States was set up from day one to be the lender of last resorts, right? So it's all relative. And, some people will say to me, "Yeah, Chris, Japan is the largest holder of U.S. debt. Number 2 is China. What would happen if China decided to, start a trade war and not own U.S. debt?" Well, it would hurt China more because we are all connected. And the beautiful thing about globalization, and I love globalization, is if we're all interconnected, then we all have to get along. Yeah. But the U.S. government has the ability to print as much as they want of this stuff here, as much as they want. It's like an open checkbook to grow their economy forever. Again, it's all relative. Yeah. Don't listen to people that say, "Oh my God, it's the end of the world for the United States because there's too much debt." It's just set up that way. And remember, it's all relative. Yeah. All right. And never listen to fear and gloom on the internet. And when you watch these financial programs on television, CNBC or whatever, don't let them influence you. Think about it from their perspective always. They're trying to make sure that you're glued to the TV because they have to compete with so many different form factors now. So they might say something like this: "Find out why the world is going to end because the U.S. has too much debt," after this commercial break. Yeah. Always do your own research. Yeah. Okay. All right. All right. Next up, Sean wrote, "When you invest in your stock portfolio, do you allocate across sectors or just buy stocks that are deemed investable after your research?" Yeah, from a risk management perspective, I recommend this. Never have more than 5% of your portfolio in any one stock. So that means you need to have at least 20 stocks. And that's good diversification in case one crashes. You don't want to put all your eggs in one basket. When it comes to other risk management metrics to adhere to, I usually only invest in really liquid stocks that I can get out of if need be. I also don't have more than 20% of my portfolio in any one particular sector, like no more than 20% in tech, healthcare, industrials, financial services, retail, etc. I also make sure that I have geographic diversification as well. And if you invest in larger cap United States-based companies, you basically have 50% overseas exposure there anyway. Yeah. And I don't put it all in stocks. I do have bonds as well. Yeah. But the best investment, as I mentioned at the beginning of this call, is real estate, especially your primary home. And if you think about it, if we went into Excel and I assume that you're never going to buy a place, you're always going to pay $1,000 or $2,000 a month rent, depending on where you live. Then over 50 years, that's over $30 million. It all adds up. Yeah, buy a place as soon as you can. For me, I had to wait until my 30s. And I bought, I was in New York City, it was expensive. And it's expensive to buy a place, eh? But after 9/11, America was on sale, and I bought. And you got to buy when everybody is freaking out. As Wayne Gretzky said, you want to skate to where the puck is going to be. And what that means, that'd be a great thumbnail for this. What that means is you want to invest in companies that people are going to like. Just be long-term focused. Real estate's the best investment you can make, though. Okay, next up, Yiping wrote, on various economic data releases every day or week, how do you tell the noise from meaningful signals? How would you digest, and which of those do you follow and take seriously? Yeah, I used to follow everything. University of Michigan, retail sales, everything. And I just decided one day I'm just going to read the Fed minutes. So the Federal Reserve, which is the manager of store of money in America, right, the one that controls interest rates, they will release their FOMC minutes every couple of weeks or a month or so. FOMC means Federal Open Market Committee meeting notes. They'll release the minutes. So I just look at that. That's it. Because that kind of takes into account every economic data point anyway, based on whether they raise interest rates or cut. And they're going to cut interest rates, I think this month, probably 25 basis points. I think that would be smarter. If they did 50 basis points, I think the market could freak out a bit. And so the Canadian government, the Bank of Canada yesterday, I think it was, cut interest rates by 25 basis points. If you cut by too much, you freak out the market. And I remember in Q1 of 2020, during the COVID crisis, the Federal Reserve cut interest rates on a Sunday, which they never do, but they cut interest rates on a Sunday by 100 basis points, meaning a nuclear 1% cut. And I remember Monday morning, my MBA students said to me, Chris, the markets are crashing. You said if rates go down, market goes up. Well, the signaling of cutting on a Sunday shows desperation. And the signaling of cutting by, 1% it's a massive amount. And so it makes more sense for governments to cut slowly and raise slowly as well. Yeah. Okay. Next up, Manas wrote, what's wrong with Intel? And this is an Intel chip from one of my case studies in my MBA program. What's wrong with Intel? It was the world leader in chips when NVIDIA was starting out. So what happened with Intel was the founders left. And whenever a founder leaves a company, it goes into secular decline in most cases. Now, there's usually one exception every decade. For example, Steve Jobs, who was the founder, came back to Apple, right? But when a founder leaves, I tend to run for the exit. And so Dr. Grove, Andy Grove, who wrote a great book called Only the Paranoid Survive that you should read, he passed away. And so the company was being run by non-founders. And as a result, whenever a non-founder runs a company, and by the way, NVIDIA, one of the reasons I've liked the company is because Jensen Huang, the brilliant CEO and founder, he's the founder of the company, still running it. But when a founder leaves a company, they don't take risks. And they run the company for the short term, meaning to appeal to shareholders. Because if the CEO of a company is not a founder, if the stock doesn't go up or if it underperforms, they get fired. But a founder has the leeway to do whatever they want longer term. In fact, a lot of times founders don't even get on the earnings quarterly call. Like Bill Gates, he never, hardly ever got on the Microsoft earnings call. Same thing with Jeff Bezos. He never got on the Amazon earnings call, at least not in the past decade or so, before he stepped aside. Yeah, and yes, I am less bullish on Amazon now because Bezos left. But the bottom line is, whenever founders leave, you have to run for the exits. And you can always do a search. I wrote an article in VentureBeat, venturebeat.com, just search for my name, called "When a Founder Leaves, Investors Should Run for the Exit." Why is that the case? Well, if you think about it, if you're an executive at a company, you're focused on, just getting promoted to the next level. And if you're an executive at a company and you take a risk with a new product, whatever it is, and you fail, you're done. You're no longer climbing that corporate ladder. And when you look at your resume, you think, what portable skills do I have? Well, I understand the politics of this country, of this company. And that's not a portable skill set. So when founders leave, innovation dies. Founders, are usually very long-term focused. That's why they're successful. The longer the view, the wiser the intention. And the board lets them do whatever they want, usually. Yeah. Okay. And Intel has tried to reinvent themselves over the years, too. I remember when I worked in venture capital, I partnered with them. I partnered with Intel Capital on a deal. Intel was the largest venture capital fund on the planet at one point. And they tried to use their excess cash to stop investing in CapEx intensive stuff like this. And they invested in software, tons of software companies, and they still couldn't turn around. Yeah. All right. But ideas or commodities, execution is not always invest in companies where the founder's running. Yeah. And the second a company starts becoming a little, especially in tech, starts becoming a little bit less relevant, it's usually game over. Because turnarounds, for the most part, don't work in tech. If you want to read a book on how a turnaround can work in tech, which is rare, there's a great book by Lou Gerstner, who is the CEO of IBM. And in the 90s, he wrote a great book called Who Said Elephants Can't Dance? Yeah. All right. And meet the requirements, Rose. This is awesome. Thank you for the recommendation. You're most welcome. Okay. Next up, Manas wrote, have you ever tried Instacart? Y Combinator funded company. I don't know. Their stock is weird. CART. Yeah, I've used it before. I used Grubhub. I used all of it. It seems like it's a race to zero. Yeah. But competition is a good thing for the consumer. All right. And I've never looked at their stock. But if you are going to look at the stock, make sure the founder is still there. Founder is still running the company. Always start with the management team. And the problem with traditional business education, meaning MBA schools, is they teach you how to analyze companies, yeah. But they never teach you anything about analyzing people. I did my MBA at Columbia, in 2000, 8 million years ago, in finance. We were never taught to analyze the management team. And what is a company? It's the management team. So always start with the management team. And when you watch YouTube videos or interviews of the CEO, make sure they can sell. Make sure they get you excited about the product. You want somebody that can stay passionate and always get investors interested in what they're doing next. For example, Mark Benioff, brilliant salesperson. He sold something that is really boring. You can't see, feel, or touch, cloud computing. And he made it sound awesome. Same thing with Elon Musk. Have you ever seen a Tesla commercial? Neither have I. He can sell. So Richard Branson can sell from Virgin as well. Make sure that these CEOs or founders in these companies that you're looking to invest in can sell and get you excited. It's really important. And that's what an entrepreneur is and a CEO. They're great salespeople. And you can learn this skill set, which I teach you in my MBA program as well. Next question I've got is from Keith, who wrote, what about long-term directionless option strategies like iron condors? Do you consider that as day trading? No, if you're the market, no. Market maker, no. I don't recommend most people use iron condors though. And what an iron condor is, it's 4 options, right? Too long, too short. And the issue is, if you're short options, calls and puts, one of the issues is this: you can get randomly assigned. And what that means is you might have to return money to somebody, and way more money than the underlying cost of that iron condor you created. Yeah, it's called random assignment. Just be really, really careful with that. But most people that make money in options are the market makers, because most people that invest in options don't really know what they're doing. Yeah. And last thing I'll say in this is there's a big difference between implied volatility and historical volatility. And for those of you in my silver or any of my MBA programs, you can always go to FA44 for a 30-hour elective on options. FA44 means Finance and Accounting, semester 4, class number 4. Yeah. Okay. But I will say, if you're going to invest in options, I think the best thing to do is this: never sell them, meaning never underwrite them or short them, because you can be randomly assigned, and just buy leaps for calls. Yeah, after you do your investment research. So if you fill out that investment research report I showed you earlier in today's call, and you see that a stock has, I don't know, 500% upside in 5 years, it's a 5x5, then buy leaps on calls. And I can go to more detail on that if anybody wants me to on this call. Thanks. All right. Next up, Manos said, you once said sponsors help to grow a channel, except from a financial perspective. Like, do you get a blast of subs? Yeah. Your channel can grow a lot faster if you take on sponsors. I've never taken one on before. Yeah. But I am tempted. And just be intellectually honest, next Monday morning, I have a call with a very large finance company, and we're going to talk about it. And it's hard for me, though, because when I set up this business from day one, I always wanted to make my student the customer. Imagine that, a teacher treating a student like the customer. And I didn't want to be, slaves to corporations that were going to influence me. But yeah, if I'm going to build these schools, and I want to build 1,000 of them in Africa, and I'm doing Kenya next. We did Rwanda last year. I might need to raise capital. Yeah. Or get donations from corporates. Yeah. Okay. All right. Yeah. How are you? Y'all graduated, I think it was last year from my gold MBA. Great to see you. Good morning to you too. You wrote here, give me a second. What are your thoughts on Goldman Sachs releasing their thoughts on how the economy will be under each political party? Yeah. I haven't seen that, but I know Goldman has superb strategists. I proudly worked there for 5 years. I think they're great, but when it comes to economists, I don't listen. And there's a famous quote that I'm going to butcher, which is something like this: economists have successfully predicted 7 of the past 58 recessions. It's theoretical. And you'll never see me teach my students about supply and demand charts. Like, who uses that in the real world? Maybe a handful of people. Now, will the market do better under, a Kamala presidency or Trump? Well, a lot of people think that if Republicans win, because they're more business friendly and believe in lower taxes, the market will do better. It's not necessarily the case. The markets do well in the United States when there's a split in power, meaning Congress is controlled by one political party and the Senate by another. Yeah. And there's certain sectors that, like energy might do well under Trump because he wants to drill, baby, drill. But then again, there could be trade wars, right? And tariffs could go up under, a Trump administration. It's a tough call. Really, really tough call. Yeah. And like all of you, I'm going to be watching the televised debate between, Kamala and Trump. Yeah. And I hope she implies, as she's been doing recently, that taxes are not going to be going up. Yeah. Much for corporates. Yeah. Because that'd be good for everybody, I think. Yeah. I'm more of a libertarian. Okay. All right. Next up, Aviation wrote, Chris, how do you think about the proposed merger of U.S. Steel and Nippon? Yeah. So U.S. Steel, ticker X, which was founded by J.P. Morgan, actually, Jean-Pierre Morgan. Actually, he owned it. And he bought it from Carnegie. Yeah. I think it should be blocked. It's too important of an industry. And I read about it this morning in the Wall Street Journal News. There's certain government officials that want to block the deal from the Japanese company, Nippon, buying U.S. steel. I think it should be blocked. And the reason I say that is steel is too important to the U.S. economy. And it breaks my heart that the Canadian government, allowed a lot of resources companies in Canada to get bought, by international companies. And it breaks my heart that the Canadian government allowed ATI to be sold to AMD. ATI is a graphics card company. Yeah. So I usually believe in small government. I loved Ronald Reagan growing up. But I do believe in government intervention when it comes to national security longer term and being long-term focused. Yeah. And I do think it's a little bit ridiculous that, you have all these massive tech companies in the US. In previous administrations, they've been broken up. Like YouTube, for example. Like Google owns the two biggest search engines in the world, Google and YouTube. Why has it not been broken up? Like even Google knows it's coming. That's why they kind of rebrand themselves as Alphabet. The same thing with Facebook. Facebook, it should be broken up. It's too powerful. In fact, 40% of people on this planet use at least one Facebook app every single month. Zuckerberg knows it's going to be broken up and should be. That's why he branded the company as Meta. It's a holding company. So I think it's coming eventually. And perhaps one of the reasons big tech has not been broken up is because of national security reasons. Yeah. But Facebook, or Meta, I should say, and many other tech companies are getting blocked on buying even small companies, tuck-ins. Yeah. And that's the government's way or DOJ's way of kind of, limiting the power of these companies. But it's a double-edged sword because that's destroying, the venture capital market. Because a lot of venture capital, firms will invest in startups, and their exit strategy might be that a large tech company buys it. Yeah. Okay, it's a tough call, eh? Okay, moving on to Miko, who wrote, can a single person fully operate a hedge fund using tools like AI and plethora of exchange specialists in FX and crypto? Yeah, there's tons of them. There's tons and tons of small hedge funds that are one-person operations. Yeah. In terms of using AI, nobody's really figured it out yet, except for Renaissance, in terms of using AI to make a lot of money. Yeah, and if somebody has figured it out, we won't hear about it. It'll be closely guarded unless they get too big, like Renaissance, so to speak. Yeah. All right. But you can certainly start any company today with no employees. I pride myself on not having any employees. I have what's called an S corporation where I can pass everything through. And I have tons of contractors all over the world, but not a single employee. And I use AI and automation to replace people, or at least not have to hire people. Yeah. And if you want to hire people, what I recommend doing is this. Okay. You can always go to onlinejobs.ph, for example. Okay. And you pick who you want to hire in what sector. So let's say you want a web developer. And these are all university educated, $7 an hour, $7 an hour, $4 an hour, etc. And what some people do, not me, but what some people do is they'll hire, 3 or 4 people doing the same job. And they'll tell them all, I'm going to keep one of you. Right? So it's kind of like, Darwinism, so to speak. And then they keep one. Yeah. And that's incredibly deflationary. Yeah. Okay. But what's going to be more deflationary, I think, is AI longer term. Yeah. And you got to try to disrupt yourself using AI before the marketplace does. And I know it's a weird thing to say, but you got to be long-term focused like that. And I'll give you a great example. Reed Hastings, the brilliant founder and former CEO of Netflix, what he did was he disrupted his own business model by, implementing streaming technologies instead of DVD rentals. And the market freaked out at first, but he was long-term focused. you have to disrupt yourself. How am I doing it? Well, there's a very big tech company in the Bay Area, and I signed an NDA. I can't release details on it, but they're beta testing something with me right now, which is an avatar of me, which we'll use for customer support questions and also teaching. And I had a conversation with it. I talked to myself, hey, you. And I couldn't tell the difference. Yeah. And I believe that everybody on this call, please start making YouTube content or Instagram or TikTok videos. Establish the brand of you as fast as you can. Because I promise you, in 5 to 10 years, we're all going to be learning from AI-based avatars. And the same thing with Hollywood. You know, Hollywood it's a perfect storm for Hollywood right now. You know, it's really, really tough. And you all see the same news releases I see, right? Hollywood is in secular decline. And what's going to happen, I think, is Sora or other online video services offered by, OpenAI are going to create different AI personalities so that you won't have to spend $50 million on Tom Cruise. It's going to be all intellectual property that's created. Same thing with musicians, et cetera. And that's why I say you got a small window of opportunity, 5 to 10 years, to create the brand of you before AI creates a better brand. Yeah. I know it sounds out there, but that's how I feel. Okay. All right. Next up, Holy Moly wrote, Chris, which news media do you read daily? YouTube channels for market news. Do you read international news too? Yeah. So every day when I'm in the shower, like this morning, I do this. Alexa, Wall Street Journal news.
From the Wall Street Journal.
Join the Wall Street Journal.
Alexa,
Journal Houses.
Stop. Thank you. I don't always say thank you to Alexa. Yeah, that's what I do. I listen to just the highlights that way. That way you can work smarter and not harder. Yeah. Also just scan, the news every day, New York Times, Deal Book, anything Sorkin writes, etc. Yeah. But I don't listen to anybody to tell me what stock to buy. I never do research that way. And I love the Financial Times, the FT. And the Financial Times it's kind of like the Wall Street Journal, but international. Yeah. And if you read the Financial Times in the Lex column, for example, in it, you'll really understand how the world works. Yeah. Okay. Aviation wrote, skate to where the puck will be. I love it. Yep. And knowledge is power. But how many of us are that clairvoyant? Alexa, what does clairvoyant mean?
As an adjective, clairvoyant is usually defined as having or claiming to have the power of seeing objects or actions beyond the range of natural vision.
Stop. Okay, I got it. Yeah. So.
Sorry, what device?
Well, I'm just gonna. I've had enough of you. I'm gonna unplug you. All right. So, investing is easier than you think if you think long term, meaning you clairvoyant. I'm just kidding. I used that wrong. I don't even know what that word means. But ask yourself this before you invest in a company. Is this company or the sector it's in going to be more relevant or less relevant in 5 years? And that can make you very long-term focused so that you don't have to worry about the path. You just worry about the destination, meaning the stock price in the long run. Just use common sense. Yeah. And never buy tech companies just because they're cheap. They're cheap for a reason. And whenever you value tech companies, or any company for that matter, you can use the templates I give you in my MBA program and value the companies based on your earnings estimates in 5 or 10 years. And that way, you can sleep at night knowing that you have great investments. And I remember when I worked in the hedge fund industry, people would say to me, Chris, you're cray-cray. You own Amazon. It has a PE of over 100 times. And I would say, no, it has a PE of 4 times my earnings estimates in 5 or 10 years. That's why a lot of tech stocks look expensive. They're not to the smart investors who value them based on their earnings estimates, in 5 or 10 years. And for those of you that don't really understand PE, like I did at one point in my life, the way I want you to think of it is this. For the rest of your life, I want you to think of all fractions having the denominator at 1. Let me explain. So PE, it means for every $1 in earnings per share, how many times that $1 are investors paying? If they're paying 10 times, then for every $1 in earnings per share, they're paying $10. And if the company is growing faster, they're going to pay more than $10. So a company has a P of 20 is growing faster usually. Yeah. And I can go into more detail on that if you want me to. Yeah. But try that with all formulas. Always assume that the denominator is 1. Yeah. Yeah. So if a company has net profit margin of 5%, net profit margin means, net income over sales. That means this. For every $1 in sales, you get 5 pennies. So each $1 in sales is generating 5 cents. 5% profit margin, net profit margin. Okay. And never memorize formulas too. Try to thoroughly understand them. Yeah. Okay. All right, guys. I'm going to take a very, very short break. Please keep typing your questions. And here's some wisdom from my son, Dylan. I'm with Dylan and Matthew, and we're playing golf. And epic parenting fail here. Remember Mario Kart in the middle here. In the middle. Oh my God. Sorry. Or I'll make this vlog really quick so I don't die. Slowly. Okay. So I'm gonna go fast. Yogi Berra said that baseball is 90% physical. Oh, God. And the other half is mental. Or maybe it's 90% mental, the other half is physical. I can't remember. I'm worried about dying, but we're okay now, right? No more touchdown. And so baseball, like any sport, is all about confidence. And the same thing with golf. And I thought of this today because when I was, okay, go ahead. Just not too fast, okay? When I was in my backswing, I told myself I'm not gonna hit a great shot, and I didn't. And confidence is not something you learn. It's a switch that you turn on or off. Okay, now hit that switch, don't touch it again. Thanks. Okay. And so if you go in your backswing, in golf or in any sport for that matter, or right before a presentation at work, if you tell yourself I'm going to do exceptionally well, I promise you will. Perception becomes reality. You got to turn that switch on. And so another thing I want to say is that in any sport, if you follow through, we know that you actually have a higher probability of hitting a good shot or making a goal, etc. And the reason is because you're focused on the end goal. You're focused on the end goal. The closest distance between 2 points is a straight line. Okay, I'm gonna end this vlog right now. I think you get the idea, so I can go spend time with my kids here. If this was helpful, and only if this was helpful, please click the like button. Don't let your kids drive ever at a young age like this. Epic parenting fail. And I will see you manana. Thank you. All right, thank you for letting me take a short break there. That was my son, Dylan and Matthew. They're like sons to me. They're great. I have 3 boys, which is cray-cray. And most people that have 2 kids, they have a boy and a girl and they're done. That's it. People have 3 kids. Usually it's boy, girl, or girl, boy. They're done. Yeah, it's a lot of work, but it's fun. And what I'm doing actually with my son is our new project is we're building a massive, I'm a nerd, a massive golf simulator in my garage so that we can play Pebble Beach together, which is fun. Yeah. And this is his club when he was younger here. Yeah. Golf is fun. Frustrating, but fun. All right. All right, next up, Manas wrote, will you ever think the market will come down or a black swan event, meaning a rare event you can't forecast, might happen? Because it looks like the bubble goes up and up and up forever. It's been like 16 years since we had a big correction. Yeah, I say we've had corrections, some, maybe not a massive one like you're looking for. Like the market did pull back, materially in Q1 of 2020. Yeah. In terms of calling a correction, I mean, the fact that the government keeps printing this stuff, and they will keep printing this stuff forever, they'll never stop, means that anything is better than this. And the only reason why this would be a better investment than stocks is if interest rates were like double digits, like they were in the early 80s. 1980, interest rates were close to 20%. And when that happens, everybody's like, I'm just going to buy bonds or keep my money in the bank. I'm not going to buy stocks. But I think that longer term stocks are a great investment, and real estate's an even better investment longer term. In terms of a correction, I can't call it. Nobody knows. And I remember when I worked for a hedge fund called quant, and Art Sandberg was the brilliant, billionaire founder, a great guy. God bless him, he passed away from pancreatic cancer, I think, 2 years ago. But I remember it was like 06 or 07, and we were pitching to him, housing shorts. We were like, well, I think we have to short Lennar, ticker LEN and KBH, because of this real estate bubble, yada, yada, yada. And then he stopped us. Very nice. Love him. He said this. He said, son. And I said, you're not my dad. No. He said, son, I'm going to stop you right there. Because I've been around long enough to know that markets peak and markets trough, and you can't call it. You can't call it. And there's a famous saying, which is the market can stay irrational longer than I can stay solvent. It's true. You can't forecast these things. So just be long-term focused. And if the market pulls back, fine, I'll buy more. And just, again, pull up any stock of any company in the S&P 500 that you've liked for 10 years or whatever it is. It looks like this. And yeah, this is when people freak out, but everything recovers. It's kind of like when a first world country's debt gets downgraded. What happens is 1 year later, in almost every case, the market is higher. And you want precedents? Take a look at the United States, Japan, Canada. Yeah. George, how are you? George is one of my students in my current MBA program. And he's going to write a book by December 2nd of this year. Love you, man. George wrote, Chris, hope you're well. Likewise. What's your view of the housing market? Regards, George. Yeah. So I love it longer term, but I don't like, I'm not a big fan of apartments in big cities, only because I think that, if the internet was invented and Zoom was invented before big cities, would we still have big cities? No. It's kind of like Warren Buffett many years ago. I was watching him. He was on a panel and they were talking about newspapers, and our newspaper is going to do well in the long run. And he said, if the internet was invented before newspapers, would we still have newspapers? So the bottom line message for me is I love real estate as long as it's not in a big city. And I'm very bullish longer term on it. Now, real estate cycles can be brutal. You can buy a house or an apartment and be down 50% a couple years later. But in the long run, you'll be better off. Also because you're not paying money in rent. You're paying to own something. Yeah. So I'm bullish longer term. Currently in the markets, what I like is that rates are going down. So when rates go down, it makes it easier to buy houses, right? And for anybody out there that owns a house or an apartment, rates are starting to come down. What I want you to do, please, is I want you to stop watching me, and I want you to call your mortgage broker and see if you can refinance. And if so, would it make sense to do so? Yeah. And I'll talk a lot more about refinancing of mortgages, et cetera, and rental real estate investments when I launch my real estate MBA or MBA course, which is coming out at the end of October. I can't talk today. Yeah, it's okay. Yeah, and Balake, sorry, Blake, sorry, love you, man. Wrote, that's what happened to an Antec, unfortunately. Yeah. Okay, and then Aviation Mentor wrote, is there a recommended reading list in your MBA program? Not really. So a lot of business books are theoretical. If you want to learn about business and you want to read, I recommend using Audible and listen to biographies or autobiographies from successful business people. Yeah, that's it. Listen to everything Sir Richard Branson writes, and listen to his books too, because he oozes positivity. He reads them himself. Yeah. Okay. But I will say one book. No, two books actually. Yeah. So one of them is probably the second best book I've ever written, which is by Dale Carnegie, and it's called How to Win Friends and Influence People. Kind of a strange title, I know. It's an oldie but a goodie. And that will help you from a sales perspective a lot. Another one from a sales and networking perspective that can help you a lot is written by Reid Hoffman, the co-founder of LinkedIn, and it's called The Startup of You. Those are two books I recommend checking out. Yeah. And if you want another one, There's a great book by Bill McDermott, who I exchanged emails with the other day. So he was the CEO of co-CEO of SAP, and I think he's now the CEO of ServiceNow. It's called The Winner's Dream by Bill McDermott. Listen to that. Yeah, I love that guy. I wish he ran for president. I would vote for him. Okay. Okay, Ryan wrote here, what would you do with a bunch of cash in a money market fund making 5%, knowing that CDs, T-bills are paying closer to 4% for 1 to 2 years out, and what the Fed will be rate cutting soon? Yeah. So here's how I think about that. So there's an old school private wealth management philosophy, which is this. You take the number 100 minus your age, and that is the percent of your portfolio that should be in lower risk bonds, for example. So if you're 80, 100 minus 80 is 20. That means that 80% of your portfolio should be in lower risk investments like the one you mentioned, and 20% in riskier stocks. Not crazy risky, but just growth stocks. If you're 25, 100 minus 25 is 75. That means that 75% of your investments in your portfolio should be in riskier growth stocks, not crazy risky, and 25% in bonds, for example, low risk bonds, yeah, or money markets, like you mentioned there. Okay. And then Manas wrote, Instacart's founder is gone. He existed the day they went public. And then you wrote, he's Indian, by the way. Oh, cool. Yeah, I don't know much about that stock. Next up, Holy Moly wrote, when Goldman Sachs, Forbes, Morningstar, etc. publish their opinions on the economic outlook, should I really listen, or are they motivated by ulterior motives? Yeah. No, I don't think they're motivated by alternative motives, but you can back test to see if they've been right in the past. Like there's one economist at Goldman who I've met, great guy, Jan Hatzius, and he's been great at forecasting the economy longer term. Yeah, you can always back test these things. It's kind of like behavioral finance. Like what I used to do was I would run a regression analysis on how a stock has done and insider selling. And from a behavioral finance perspective, you can tell if that means if there's insider buying, if the stock is going to be higher next year, et cetera, or lower. Like Bobby Kotick, for example, who was the CEO of Activision, ticker ATVI, before Microsoft bought it. I remember I used to meet with him, every couple of quarters or so when I worked in the hedge fund industry. And I always would ask him, because when he sold stock, 1 year later, the stock was down a lot, Activision and vice versa. And it was all publicly disclosed too, right? There are 13 Ds. You can go to sec.gov. But I would always ask Bobby, I'd say, Bobby, how should we think about the fact that you're selling stock in terms of the outlook for the company, right? And he never answered me correctly. He always says something funny like, oh, well, what do you want me to do? My wife, she has expensive tastes. Yeah, funny guy, yeah. But that's behavioral finance. You can always do a regression analysis to see if there's that relationship between insider selling and the stock price, yeah. And it works. And there's, I think it was Richard Fuller from University of Chicago. He runs a fund out here called Fuller and Taylor. I think he and maybe it was Taylor got a Nobel Prize in Finance a couple of years ago for this. But you can run a regression analysis. In fact, I've done it with Elon Musk. And when Elon Musk buys Tesla stock in size, the stock is way higher, usually, a year later, and vice versa. And those are Form 4s, I should say, not 13, sorry. Form 4s. Oh, and if you want, I can show you a real-time case study of that on Tesla. Just go to sec.gov, type up Tesla, ticker TSLA, and look for the Form 4s in Q1 of 2020 to see how much stock Elon bought. Okay, a ton. And then he sold it in late 2021, 6 weeks before the market pulled back a lot. Anyway, it's all out there. All the data is there for you to go through. Yeah. Okay. Getting a bit hungry now. All right. Actually, get my coffee first. Okay. But don't rely on anybody ever to tell you what stocks to buy. Always do your own research because nobody's smarter than you. Okay. Okay. Next up, Andre wrote, "Good morning, Chris. Hey, how are you? What time is the MBA Q&A?" Yeah. So what you can do is this. Just go to the first lecture of your curriculum, and then you'll be able to get access to the Zoom call. As you can see here, I have a weekly Zoom call for my MBA students. It starts at 10 a.m. Yeah. Yeah. The first lecture, and you'll get more details on that. Yeah. Okay. Let me get rid of that propaganda. Okay. And if I missed anybody's question, you can always repost it. If I see anything that's like derogatory, and I usually just delete it. And I'm so sorry for those of you that see it. It happens. Yeah. Okay. Pranav wrote, "What advice would you give to your 20-year-old self? What are some things you would do differently, if anything?" Yeah. Oh boy. Whew. I'd probably say, Chris, stop worrying about what people think of you. Because as Les Brown said, somebody else's opinion of you does not have to become your reality. I would also tell myself this: unjustified criticism is nothing more than a disguised compliment. Let me say that again. It's powerful. Unjustified criticism is nothing more than a disguised compliment. And so anytime somebody criticizes you unfairly, maybe they're envious of you, whatever, just process it differently. In your mind, think, thank you for that. Thank you for that compliment. It's like the Rodin sculpture. I've upgraded my props. It's like the Rodin sculpture. I think, therefore I am. Process it differently. And if you're not getting criticized, you're not successful enough. So just be Teflon and thick-skinned. Yeah. And another thing I would say, and I haven't pulled this out in a while, but I love this. I'm certainly not an artist. But I would also say this, because you asked me for advice to my 20-year-old self. This is the most important chart you'll ever see. You've got age here and give a darn right here. Okay. When you're younger, like my kids when they were younger and stuff, you have meltdowns at a restaurant. You really don't give a darn what people think of you. When you're older like me, you're over here. You also don't care what people think of you. The problem is when you're younger, in your teens, 20s, 30s, 40s, sometimes even later, you're up here. You give a darn what people think of you. And this is a dangerous place to live. I call this a triangle of despair. And I want you to all live at this level here and tell yourself, I just don't care what people think of me and my choices or anything about me, my career, etc. I don't care. I'm not here to serve others. I'm here just to be happy and make the world a better place. So I want you to live at this level. And Elon Musk always lived this level. He doesn't care what people think. I'm not saying be rude or disingenuous, but he doesn't care. Oprah Winfrey was told she'll never make it. She didn't care. I want you to live at this level here and just don't give a damn what anybody thinks of you. And, for an exercise, your homework or your shukudai, for my Japanese students, is I want you to do this. I want you to open your iPhone or your Android handset right now. Everybody, please. And I want you to do this. I want you to create a calendar entry that repeats every single day at 5 a.m. Okay. And in that calendar entry, I want you to write this. I don't care what people think of X. Do that 10 times, solve for X. I don't care what people think of the fact that I still play video games. I don't care what people think of the fact that, I've got a big nose and I go through these makeup things really fast because this thing is massive. But it's aerodynamic, eh? Like I can kick anyone's butt in a ski race. I don't care. I don't care what people think of the fact that, I wear a really nice Zegna Italian suit, but I've got really cheap old Lululemon pants down here because you can't see from here down. I don't care. It's a subtle art of not giving a darn. And if you live your life that way, you're going to be happier. Don't you want to be happy? I don't care. It's therapeutic. Try it. Okay. Yeah, would I do anything differently in my life when I was younger? Yeah, I just tell myself I don't care what people think. Yeah. By the way, how's my hair? Just kidding. All right. Next up, I have got here Loic, who wrote, what is your opinion on pursuing another profession than the one your formal education prepared you for? Coming from a law graduate who wants to pursue finance. Sure. I know a lot of nice lawyers, but I have to ask this question. Are lawyers a jerk before they go to law school? Or is that something they teach you in law school? I'm just kidding. So, yeah, no. I have a lot of friends actually that went to law school that are not pursuing law. I have a lot of friends that went to law school that are investment bankers. Sorry, God, I made a mistake again. The great thing about law school, I will say, is this. You learn how to read contracts, and you learn how to think differently, etc. You learn how to overbill by saying too many words every hour. I'm just kidding. But no, you can easily change careers. And what you can do is just set up a bunch of informational meetings if you want to with people that work at different companies in different industries. And just bond with them, as I explain in my MBA program in a lot of detail. And then, you can basically, you can say why your background is different and unique and additive. Let me show you. All right, watch this. And this, I'm going to make this a generic answer to help everybody in this call when it comes to interviews. Okay. So I want you to think of whatever your weakness is, and we're going to turn it into a strength. All right, so let me go here. Let me start a new one here. Okay, watch this. I have a law degree, and I think this is a weakness. Turn it into a strength in 10 bullet points for an investment wanking interview. Okay, good. And do this, everybody, for whatever you think your perceived weakness is. All right. So here, you're in your informational meeting, okay, with an investment bank, and you're a lawyer. Analytical thinking. Well, a law degree sharpens analytical skills, enabling you to dissect complex information, identify risks, yada, yada, whatever. Risk management, expertise, or lack thereof. Due diligence, negotiation skills, right? Obviously, that's great for lawyers. They're trained negotiators. Strong communication skills. They speak good and stuff. All that crap, whatever, right? You can even do this. Watch this. Okay. I have an interview, and my grades are bad because I had to work part-time jobs. Turn that into a strength in 10 bullet points. Okay. So whatever your weakness is, you mention it here. Well, yeah, my grades were bad, but I have good time management skills because I had to, work a couple jobs, financial responsibility. It actually is real world experience. It's not theoretical. I'm adaptable. I'm resilient. All that stuff. Amazing. Anyway, so that's what I recommend you do. You use ChatGPT, and you ask ChatGPT to help turn your perceived weakness into a strength. Yeah. Okay. Next up, and Loic, I was totally kidding about the jerk lawyer thing. Yeah. Okay. Jamba wrote, hey, Chris. Hey, Jamba. Nice to meet you. First time I've seen you. Hope you join us again. Thank you. Question is, I've completed a lot of your courses. I have a couple of questions. Sure. Thank you. Does Auto GPT still work? Please check with Luca. I don't know. But if you want, you can contact Luca on that. Just go to LinkedIn. He's great. Yeah. And then your next question is, what do you think of Ray Dalio? Yeah, sure. Okay. So Ray Dalio, he founded a massive hedge fund called Bridgewater in Connecticut. I think he's a good stock picker, but I certainly wouldn't listen to him when it comes to his book on principles and his economic advice. People that are really good stock pickers are not a good economist and vice versa. Now, Ray Dalio, I'm going there, I don't care. All right, so Bridgewater, I have friends that work there, very senior executives there. And yeah, you make good money. But according to my friends and people familiar with the matter, the turnover rate is 40%, right? People leave a lot. And also, and this is uncomfortable, but I'm going to tell it like it is. Every single conversation at Bridgewater is recorded, except for in the bathroom. It's kind of an uncomfortable culture, right? I mean, if you're an investor in Bridgewater, great, you're making good returns. But I don't know. All right. And somebody please answer this question. There is an actor who would have all of his meetings in the bathroom. And his name was Fonzie. What is the name of that actor? And I'm clearly dating myself. Okay. And then what do you think of Robert Kiyosaki, Rich Dad, Poor Dad? I think he has a lot of great advice. I've never read his books. I've seen his books sometime. So I'm going to tell you right here. Watch this. All right. 5 bullet points on Rich Dad, Poor Dad, summarized at 8th grade level. Here you go. Financial education. I agree with him on that. That's what I teach. Work to learn, not just for the money. That's right. If you chase money, you lose your dreams. But if you chase your dreams, you don't care what people think of you. Your dreams come true and the money comes accidentally. Make money work for you. Absolutely. Just like Warren Buffett says, you want to spend what is left after saving instead of saving what is left after spending. Risk taking, all that stuff. Yeah. Okay. Now you're thinking, Chris, why do I need to listen to you? I can just use ChatGPT. It's true. Okay. And then there's a question about Udemy. So Udemy is a great partner of mine. And by the way, whenever I lose my voice, and you guys can get this too, I feel like this is the Truman Show. You can buy a clear voice. Yeah. Questions about Udemy. I signed an NDA with Udemy, so I don't answer questions on Udemy. And then Jamba also wrote, lastly, you're doing a great job and we appreciate it. Thank you. I appreciate you. Thanks. And every day before I get out of bed, I thank God for 10 things in this order. Andrew, Matthew, Dylan, Christine, my wife, my mom, my dad, my brother, Jamie, my sister, Katie, God bless you, and my sister, Elizabeth, and all of you, my students. So, and if you practice gratitude like that before getting out of bed every single day, you'll be in a peak mental state. And you'll just focus on what you have. That makes you happy. Instead of focusing on what you want to have. Retail therapy doesn't work. Unless you're buying GTA 6, then it does work. Yeah. And Manas, you're most welcome for that. And thank you for that other comment there too. And then Aviation Mentor wrote, very handsome young man there. My son Dylan in that video when he was younger. Yeah. He's a good golfer, man. He just started golfing. I think it was in May of this year. He played with my parents, and he's shooting just above 80 now. It's pretty good for the front nine. And once I set up that thing in our garage, maybe I'll take a video and show you guys as well. Yeah, the golf simulator. Yeah, we're going all in on it. And then he wrote, the next Mario Andretti. Oh, dude, he's going to be driving next year, too. Yeah, actually within a year. Yeah, because you can start practicing when you're 15. Yeah. How crazy is it that you can drive at 16 You can be enlisted to go to war at 18, but you can't vote, and you can't drink until you're 21. I just don't get it. Yeah, in Canada, you can drink when you're 18. I was in McGill. Yeah, Montreal is where I learned how to drink. Yeah, I had so much fun there. And then Holy Moly wrote, Dylan is a mini you. Yeah, he's smarter. He's wise. Yeah, he's smart. He has my wife's genes. Yeah. Okay. And then Theodore wrote, Chris, how do you pick your stocks for trading options? Yeah. So I do it in reverse, actually. What I do is I pick stocks first, and then based on that, I'll invest in options. Right. And so my methodology, and I'll spend 10 seconds on this. That's it. Only because I mentioned it before. But my methodology is what I do is I do an investment write-up. This is one of the MBA downloads you get, templates. I do an investment write-up, come up with a target price, okay, on the company I'm doing research on. And if it's way, way higher than where the stock is right now, then I might buy leaps. And let me show you that. Okay. So if we go here to, so let's say Tesla, that was the first stock I thought of, right? After I do my research on a stock, if I think there's a lot of upside, stock's at 220 now. Let's say that I think it's going to be $1,000, totally making this up, in a couple years. So you go here to options, and then what you can do is you can go down to, see the longest expiration date, it's a couple of years here, okay? And then what I can do is buy calls, and I'll buy calls that are way out of the money. Like you can get these for pretty cheap. And then anyway, that's how I do it. Yeah. Okay. And then Miko wrote, your name seems like Middle Eastern origin, more like yeah. So my dad is from Egypt, and my mom is half Lebanese, and I think there's Scottish and Irish in there as well. Yeah. Okay. And Yakub wrote, Henry Winkler, and so did Jenny. Yes, nicely done. Henry Winkler was the Fonz in Happy Days, and he used to have all of his meetings in the bathrooms. Yeah, that's where Ron Howard started his career as well. And the Fonzie used to go like this, "Hey," which was cool when I was younger. But now I look like a loser when I go, "Hey." Yeah. Okay. Yes, everybody got it. Excellent. Excellent. Very cool. Very cool. All right. Okay, guys. So what I'm going to do is I'm going to play a life-changing video for you that I licensed. It's a Steve Jobs interview. I licensed it from the Silicon Valley Historical Association. That really is life-changing. And for those of you that want to join my Zoom call, it starts at 10 a.m. You can always check out my Silver MBA program for more details. God bless you. Oh yeah, click the like and subscribe button and all that crap as well. Love you all. And I'll see you next week and every single week at 8 a.m. Pacific time. Thank you.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it, that's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it. versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.